Hello and welcome to today's video. I'll be giving a very brief introduction to the topic of audit evidence. This audit evidence topic is split into two parts. Part one will be in today's seminar, and part two I will cover in the next seminar. The learning objectives for today are four. First of all, you should be able to list the main types of audit evidence. Secondly, you should be able to assess the reliability of different types of evidence. Thirdly, explain how the different types of evidence pertain to different financial statement assertions, and explain how the confirmation process should be handled. Now, of these, the first one, list the main types of evidence. This is very simple. There are 7 main types, as I'll explain in a moment. But the key really is for part 2 and part 3, because not all of these different types of evidence are equally informative, right, or equally reliable. There are some types of evidence that are more reliable than others. In addition, the reliability of the evidence depends very much on the purpose. So in other words, why are you trying to do the test? What is the objective of the test, right? So for some types of tests, or some objectives, the evidence is going to be very reliable, but for other types of tests, the same evidence may not be reliable, okay? So I'll be talking about how the different financial statement assertions, like for example, existence, completeness, ownership, occurrence, valuation, how the different types of evidence relating to those assertions differ in terms of their reliability, okay? So this is all important because you need to be able to make a decision when you're doing an audit about how you're going to collect the evidence, right? There's more than one way of doing an audit, so you have a lot of discretion in what type of evidence you collect, and so you have to think about what the objective is of your test, right? What are you trying to achieve? Which financial statement assertions are you trying to test? And then that can help guide you as to how to construct your test and what type of evidence to look for. Okay, so that's the main feature for today's class. And then in addition, we're going to have a student presentation that's talking about the audit confirmation process, because there are some cases in which frauds occurred and auditors failed to discover the frauds because the way that they performed the audit confirmations was not done appropriately. Okay, so the outline for this seminar, I've just gone over the objectives. Here's the reading. So you should read this seminar outline, read the student presentation materials in this outline. I'm recommending but not requiring you to read chapter 7 of the textbook as well. And then for the presenters, I have some additional reading here. So I have a paper by Diane Javrin, Castor, and Randy Elder in 2010. This is very useful for answering question 2 in the student presentation. Here's the auditing standard relating to confirmations. So this can help you also with the presentation. And then we have a proposed auditing standard, which is being covered in question 3 of the student presentation. And then we have a revised proposal for the auditing standard on confirmations. Okay, so this will provide you with some more recent information, although it's still back in 2015, some more recent information about how the proposed new standard has been updated. Okay, so the questions to be discussed in the seminar. Question 1 is about the audit confirmation process. So which types of people receive confirmation requests from auditors? What's the difference between a positive confirmation and a negative confirmation? Why are positive confirmations more reliable than negative ones? Given that negative confirmations are less reliable, why would an auditor ever use a negative confirmation? When would an auditor use positive confirmations? When would an auditor use negative confirmations? And why are confirmations generally required when testing accounts receivable, but not when testing accounts payable? Okay, so that's going to be covered in question 1. And for question 2, you're being asked about what's the purpose of obtaining bank statements and obtaining a bank confirmation. Okay, so that's question 2. Then we have some multiple choice questions, and then we also have a student presentation. Here are the student presentation materials. And the questions for the student presentation are threefold. First of all, why should auditors not rely on audit clients to deliver confirmation requests? So if you have a look at the information in the presentation, you'll see that the frauds at Parmalat and Satyam occurred because auditors did not maintain proper control over the confirmation process. So that's the second part. How did the auditor's failures allow the frauds to continue undetected? Question 2 is for the presenters to describe problems that have occurred in the confirmation process. The article by Janvrin Kastet-Nauder is particularly useful for answering this. And then question 3 is about the PCAOB's proposal to improve the auditing standard relating to confirmations. Okay, and do you think that these proposed changes will help to remedy the problems that you identified in questions 1 and 2? Okay, so that's the outline for today's seminar. The major types of audit evidence, well, there are 7 of them: physical examination, confirmation, documentation, observation, client inquiry, recalculation and reperformance, and analytical procedures. Now, in this seminar, I will cover the first 3 of those. That's physical examination, confirmation, and documentation. And in the next seminar, I'll cover the remaining 4. Right? So that's where we'll leave this video. In the class, I'll start by talking to you about physical examination.